All right. Well, you were here to talk a little bit about cash out refinance. I'm going to give you a little bit of my background, and then Daniel's going to give you a little bit of his background. We play in financing in two different spectrums. I'm a mergers and acquisitions company. I usually don't try to recognize myself as a mergers and acquisitions just because what we do is so flexible and it's so unique and specific to, and it really changes a lot depending on the circumstances. But what we do is most of the times we provide cash for equity. In many of those situations, we provide cash by refinancing. We're more focused in the corporate of the business world rather than the residential. And anyway, that's kind of just the summary of what we do. We've been doing this for close to 10 years. And my main business, actually, I come from a manufacturing background. I started my first business when I was 20 years old, about 22 years ago. And we began by manufacturing labels or printing labels for the automotive industry. 60% of our business was automotive before the pandemic. Right now that share has reduced a lot because of the opportunities that the pandemic brought to us. We became more involved in the pet supply sector and other kind of sectors. But as we grew throughout that particular business is called Techna Impact. That's basically my baby, my first formal business. And as we grew through it, in 2008, we went through the whole bubble. Well, it wasn't really a bubble, it was the real estate crisis. And we restructured, and we were able to survive that. But it also brought us through a lot of opportunities for us to learn. For us to learn that, how to prepare better for crisis, how to support other businesses and other enterprises when these particular challenges come into play. Anyone who's an entrepreneur knows that at some point or another, you're going to become extremely stressed out by many of the different circumstances, financial circumstances that can put a heavy burden on you. And because of 2008, we specialized in being able to solve those problems. So in 2012, we formed Probusway, which started by providing that kind of support, that kind of financial knowledge, resources, client synergies, and so on and so forth, to make other businesses that had been gone or are going through those particular circumstances, being able to provide them with the resources so they can survive. I'm glad that was the summary, but Daniel?
Yeah, what he said. So we are discussing here on the platform today for cash out refinances. And typically in the cash out refinances, there's three primary sectors in cash out refinances. There's residential properties, there's commercial properties, and there's business financing. So those are the three main sectors when it comes to any type of cash out refinance. Ernesto handles the aspect of the mergers and acquisitions sector, which is in the business refinancing cash out when businesses are looking to get money out of their companies, and also have an investor come in and invest money in order to get that cash out. I specialize in the debt financing, so I focus on all the products that are available for residential, commercial, and business that have to do with debt financing. We have over 200 financing products. We have proprietary software technology that we utilize to help organize all the financing products in the industry, and that's typically what we do. We focus on business financing, residential financing, commercial financing, and the technology that organizes all those products for the market. And so that's what we are able to do in terms of adding value to everybody here, and anybody knows, they can access that with us on our platform. But that's primarily what we do and what we specialize in.
I think one of the, no business works without cash, and it comes into play more often than we think about the need of that extra cash. So there is so much money available there, to be able to put your hands on, and when you look at the equity of a particular opportunity, I think that Daniel can provide you with a lot of valuable information on what is it that you need to do in order to be able to get that, what is out there. Like he said right now, there's different type of structures. And I would like to ask Daniel, because he's really an expert in this area. I mean, there's very few people that know as much as he does in this particular lending and cash refinance. What are the qualifications that you feel that are key in order to be able to access this kind of refinancing structures?
Yeah, that's a good question, Ernesto. Basically, what we see is, in terms of qualifications, primarily when you're doing a cash-out refinancing, the deal has to make sense. So a lot of times, the primary factor that any lender is looking at is the debt coverage service ratio requirement, meaning that can the income that the property bring cover the debt? So right now rates are good. So you have a third, and the terms are over 30 years typically. So as long as the monthly payment and the taxes and the insurance, let's say, is $1,000 a month, and your rent is $1,000 a month, that creates a 1.0 debt coverage service ratio. That means that the loan that I give you, the rent that comes in can cover it. Usually lenders are looking for 1.2 to 1.3, which means that you're bringing in $1,200 a month if your total monthly expenses are $1,000 a month. So that's kind of the primary area that the market rent that they're looking for when they're making a loan. Any lender is making a loan. There's other things like credit score, which is important, but it's not the end all be all. There's ways of improving credit, and there's even products for people that have no credit at all. So credit score is a key factor, but it's not the most important thing. There is the type of property. There's commercial properties, there's residential properties, there's businesses that have properties. And so, those are things that people look at. But I think those are the main things that we're looking at when we're looking at the qualifications.
Now, let me ask you something. I mean, the reality is that people that have great scores, it's very easy for them to get cash refinancing or get any kind of financial support. But there are a lot of people, I mean, a big portion, of population in the United States and actually globally, that do not have that, that for X or Y reasons, their credit score is low.
Yeah.
How do you deal with those kind of situations as far as lending is concerned?
Well, mainly we're looking at the property, but if somebody's credit score is low, there's ways of, adding authorized user trade lines to their credit to boost up their scores. There's ways of, eliminating negative items that are on there from the past, collections or old lates and things of that nature. There's ways of removing inquiries. A lot of people have excessive inquiries when they were shopping around. That could bring up the score. So there's a lot of different ways to bring up the credit score. Sometimes there's partners on the company that have better credit, and there's certain corporate structures that can work for those scenarios. If there's certain ownership percentages above a certain amount, so there's ways of, in terms of structuring, that can help. There's many ways to do that, and those are different things that we can also help with when we're analyzing any particular client.
Okay. Now, is there a range? I mean, which one would you think that it's the best fit for in your case, nationwide lending, direct lending?
Yeah. And what was the?
What is the niche of the kind of approach that you get? I mean, what kind of people do you actually look for in order to be able to provide that kind of refinance? Is there anybody in particular, kind of a niche?
Yeah, I mean, we're looking for people that have equity in properties, right? So typically when you're refinancing a property, you're gonna get not more than 80% loan to value. So the property's worth, $100,000, we're gonna lend 80%, I would say 70 to 80% LTV, which is $70,000 to $80,000 if a value of a property is $100,000. Those are typically, we can go to no limit on refinancing. We can finance in the hundreds of millions. We can finance for $100,000. We're always looking on a deal-by-deal perspective. Does the deal make sense? Is there equity in the property? Does the property have the ability to pay for the debt that we're going to provide? And if not, do we have a plan to get it there? There's construction loans, there's renovation loans, things to improve the value of the properties, in which case we're looking at the completed value of the property and what the final loan to value will look like when the property is completed. And we can give borrowers construction loans as well. So there's a lot of different things that we're looking for, and we can finance properties nationwide. In terms of primary residencies, we're licensed in Florida, so we can help those that need to get loans against their primaries in Florida. But primarily right now, we're focused on business purpose loans on investment properties nationwide.
Okay, so right now your main focus right now is in commercial properties? Is that what it is?
Residential properties
residential?
that are investment properties, meaning not second homes and not primary residencies, although we can do those in Florida because we have the license for that. Okay. So mainly loans that are investor-based and commercial as well. So we can deal with commercial properties and also businesses. If a business needs to get a loan on their existing real estate that they're operating, whether it's a hotel or a convenience store or any type of business that's out there, we can give them a loan against that business as long as it's within a SIC code that's okay. And if it's in a more risky SIC code, then we have some more riskier products as well. For example, we offer hard money loans, which is important right now in the residential space because a lot of people were behind because of COVID with forbearances and a lot of things, and they're still behind.
What they call the bridge loans?
Yeah, and they need short-term bridge loans to be able to get some money to get caught back up on payments and eventually be able to take advantage of the great interest rates right now for a low interest rate conventional loan. But they can't get that right now because they're behind. And so those are areas that we see a big popular demand in as well right now.
So basically what you do is you offer a bridge loan to somebody who probably has some forbearance right now to be able to catch up with that bridge loan, catch up and restart his finance, basically get out of the forbearance and eventually be able to qualify for a refinance.
Yeah, exactly. We're all about how we can add value to the consumer. You know, when COVID hit, and this is one of the reasons why we got, the award here, we developed a completely digital process from A to Z to finance all the business owners in the country that we could. Get SBA PPP money in their hands and relief money to get the businesses back afloat. Well, the next phase of that, now that the PPPs are done and the government EIDLs are pretty much all that money's been out there and helped the business owners. A lot of people are still behind on their mortgage payments because they didn't have the money to catch up. There was a year where everybody's business was disrupted. So, everybody's still getting back on their feet. And so there's a segment in the market right now that's missing. And, we're also helping to kind of prop up that part of the market. We helped everybody and the business owners get back on their feet, thousands of people. We helped them, that's great. Now we're focusing on how we can help the homeowners. But there is no government product for that. So we come in with a short-term bridge loan to provide that to them, get them back on their feet, then refinance them into conventional loans, and can help the market grow and, evolve in a more productive way so that we don't have any significant market crashes. And that's what we're doing as a contribution to the economy. And we also, that's one sector, right? We also have the 30-year fixed low interest rate loans, for people that have investment properties and are paying on time, and that's good. So we have, the different sectors that we can help with.
Right. I don't know if people realize the amount of value that they currently have in a cash out refinance. At the interest rates that these particular cash opportunities or finances can come out right now, which is at a very, very low level right now. People are, I see this more on the residential side where people come in and refinance their houses to obtain cash to buy new furniture, to do a bunch of different things that really don't create value. They're more liabilities than they're actually assets or investments. But I think there has to be a lot there needs to be a lot of focus and a lot of education to the people that are financing to understand that right now they can actually get money out of that refinancing or cash out refinancing and utilize that money to make more money. What I'm saying is if you get a refinance loan at, 2.5%, 3%, assuming, putting a number to that, and you put that money to work in an actual investment opportunity, and that investment can bring you 10 to 15 to 20% back. There is a lot of value in cash out refinancing. What do you think about that?
I think you touched on a great point. This is a good opportunity to be able to, there's a lot of great opportunities right now. Real estate is doing really well in certain states, especially in Florida where we come from. And, there's an opportunity to get low interest rates as well. So you can refinance your property, get the cash out, write off the expenses that you spent to get that money, write off the interest that you're paying on that against the income that you're bringing in on your rent. So essentially your effective interest rate is even lower than what it actually is because you're writing that off against the income. And you're taking that money, then you're reinvesting it into a new property. And, you know, if you already have the experience, you know, and you can find a good property that you could put it into, you can, you know, we can give construction loans up to 90% of the purchase and up to 100% of the construction. I mean, that's amazing. That's phenomenal. You know, you could take your cash out, buy a property for a little bit of money, construct it, and then sell it or refinance it as long as it's going to be 70% of the completed value, which is the way the market's going pretty often. Whereas back in the days, it was a lot more difficult to do when the market wasn't trajecting that direction. So it's a good opportunity right now. And what we're seeing a lot of is a lot of our investors are getting blanket loans. They're giving us 10 properties, 20 properties, 40 properties to finance all of their properties. And so we're able to do one big blanket loan on 40 properties and give them a loan, 75% loan to value, a rate in the high threes, low fours, and they're able to take advantage of that money and continue to build their business. Right now is a good time for that. Maybe in 5 years from now it won't be, but right now is a good time, and while the time is good, it's good to take advantage of it. People need housing right now. Post-COVID, it's very important to have place to stay, and inventory is really short in certain areas that are very popular, like in Florida and other areas. So we're seeing a big demand in that. But yeah, I agree with you there. It's a good time to cash out, refinance, and take that money, invest it into whether it's your business or buying more properties.
Right. A good friend of mine asked me recently. He was going through an actual refinance and getting some cash out, and he wanted to use it to buy stock. Yeah. And like I said, there are a lot less opportunities as there were last year. Last year, the market was full of opportunities to be able to use cash for stock. And he asked me, "Hey, what do you think? Where do you think I should put my money?" And my question was, "Do you owe money in credit cards?" And I said, "Yeah, I owe my credit cards. I owe them. Pay on that, right? I mean, that's credit card payments are anywhere. The interest rate on the credit cards are about 20%, and people just don't realize that instead of using a solution like what you offer, for example, refinance on cash out refinancing, they use credit cards instead of using an opportunity to be able to pay 2 to 3%. On cash out refinance, they go and they max their credit cards and they just continue paying them for the rest of their lives when they have so much value right now in order to be able to take advantage of programs such as Daniel's talking about."
Yeah, I agree with you. I mean, credit cards, if you use them intelligently, could be good, meaning there's some 0% interest promotions if you apply for credit cards that you can get for 12 months, things like that. It's okay to use it for those introductory periods, but eventually you're going to have to refinance that debt, right? So, or pay it off, and so you could use it temporarily to do some work, and then you can refinance it out with your properties. It is a strategy that you could use if you're going to do it in that sense. But of course, at the end of the day, you're going to need to refinance. So, you might as well take advantage while the interest rates are low, and get the money that you need now, lock it in for 30 years, and continue to grow your business.
Exactly. Now, you were talking a little bit about business, right? About the ability to do cash out refinancing, but from a business perspective. You have operating capital
Correct.
needs, revolving lines of credit. I mean, payroll, so many different kind of expenses. How do you deal with that?
Yeah. So I'm an expert in over 200 financing products. So in the business sector, there's a lot of financing products, for example, right? There's residential, commercial, and business. Those are the main sectors. In the business area, there's a lot of different products. There's the SBA 7A, which typically doesn't have to do with real estate. There's the SBA 504, which has to do typically with real estate. There's equipment financing. There's purchase order financing. There's cash advance financing, multiple tiers of that. There's a business loan against property as an advance. There's a lot of different products. There's accounts receivable factoring, and so on and so forth. So there's multiple products that are available. Depending on what the scenario is, one may be more advantageous than another. That's something that we can help you analyze. But to add to some of the value that you bring to the table, a lot of business owners are looking to look for investors that can come in and not necessarily just give debt, but also come in with equity. We don't necessarily deal in the equity side of it. We're focused primarily on the debt side of it. Although on the commercial real estate side, if it's like, 100 mil plus type of deal, we'll work with the equity portion. On your side, you focus on the business equity. So I think that's an area that you can come in and bring a lot of value to, a lot of borrowers that are interested in having an investor come in so they could do a combination of debt and equity. Whereas we'll, team up together. I'll help on the debt side. You can come in with the equity side, and you can arrange the debt and equity for those borrowers. And I think when we were speaking earlier, you said your target market is between 1 million to 5 million in terms of the size of the loan and the equity, and possibly even more. And that's something that if you could tell us a little bit more about that and what you can bring to the table on that, I'm sure a lot of people could definitely use that.
Right. Well, what we do is, actually we can go as low as $100,000. We look at different kind of opportunities, different sizes. And by being a company that it's looking to be able to provide that additional support on cash flow to businesses, we can become very creative. Some people just identify as cash out refinance. Obviously the first thing that comes to mind is obviously real estate. It's a more conventional cash out refinance that you can hear of. How much is your house worth in the market, and how much have you paid, how much do you owe, and whatever difference is in that particular equation, well, that's what you can get out. But when you look at a business, it's a lot more complicated than real estate. In business, there's a million different things that you have to take into consideration. You have to consider the quality of the talent of the people, whether they have an opportunity of growth with a particular amount of size of money. You can value a business today, but that doesn't necessarily tell you what's going to be the value of that business in 5 years or in 2 years by making some changes or bringing some synergy from additional partnerships into place. So just giving you a little bit more background about what I was saying when I started introducing myself. 2008 was a very tough year for us. We literally lived a bankruptcy, and the only reason that we didn't bankrupt is we didn't file for it. 2008 was a tough time for many, many people.
Yeah.
When that happened, I had an incredible opportunity, and actually I feel very, very lucky for having had this particular person in my life, which was my client at the time. His name is Michael Nixon, and he had, before things got tough, he had approached me and told me that he wanted to partner with me. But at the time I wasn't interested. Things were going well. That was sometime between 2005 to 2006. Then 2007 came, 2008 came, and things got a lot more complicated. So I approached him and I said, Mike, if you wanted to partner with me, this is the time. However, when you offered that, I wasn't in the situation that I am right now. And we sat down. I remember closing the door to my office, and we sat down there for 2 hours. And he listened, and I talked. And I had so much baggage. The amount of baggage that I had at that time was in the millions. And at the end of the conversation, he said, what, Ernesto, I do appreciate very much you opening up to me and telling me all your, little things or big, huge things that are going on. And yes, I still want to be a partner. So that was life-changing for me. I wouldn't be here if it wasn't for that particular conversation and his leap of faith. And it took a couple of years to be able to turn the company around. He invested a lot of resources. In the beginning, he said he was not going to invest any money, that it was going to be more know-how. At the end, he ended up investing a lot of money into the situation. And after that experience of restructuring, I understood way better what business and what this particular type of company can do. It's a life-changing situation. If you're an entrepreneur, you know that it's not a matter of when you're going to be going through these challenging times, but a matter of when. And that's what we created with Prosway. We created a company that understands finances, understands debt, understands that there's businesses that owe a lot of money, but they have a lot of opportunity. Sometimes they owe a lot more, sometimes they owe a lot less, but there are ways to fix those things. And when you're going through that challenging time, you don't think about the solutions. you only think about the problems. So it's important to be able to have that, to add that particular part of the opportunity into an equation of an equity. And like I said, eventually you look at the company, you talk to the person, and at the end of the day, it's going to be, do I trust this person to be able to turn it around if I help him? And does he want to be helped? And then you refinance. We go into the cash out refinance. Well, this person maybe owes $100,000, and that's his problem. Well, you analyze the debt. You analyze how much money does the person need to be able to turn things around, and maybe it's $150,000, maybe it's $500,000, and you refinance their debt. You take the lenders, the banks usually, which are the more harsh financial institutions to go against situations, and then you become involved. You buy equity, really. But anyway, that's really how another way to see refinance or cash out refinance from a business standpoint.
Yeah, that's great. Yeah, I like the way that you can improve the efficiencies through reducing costs, utilizing your resources to be able to do that and add strategical value. And there's a lot of small businesses that can really utilize that in addition to the capital and the debt.
Absolutely. So anyway, I don't know if you want to add anything else?
I guess at the end of the day, we're here to add value to everybody that is watching, and that's here today. Whatever we can do to help you, I think Ernesto, there's a way that you can reach out to him if you're, a small to medium-sized business owner that needs to go ahead and get some money and get your company turned around or improve efficiencies. And then for us, anybody that's looking to finance anything on the residential, commercial, or business space, whether it's $50,000 or $500 million, we can certainly get it done for you, whether we're lending directly on it or through one of our lending partners that we have very close relationships with. And there's ways to get in touch with us to be able to do that. Right. There's ways to get in touch with Ernesto as well in order to be in touch with him. So I think, if you want to tell them a little bit about what they can do to get in touch with you, if they need, your assistance, and then I can, do the same.
Absolutely. I can be obviously reached. We have a couple of websites. My core business, like I said, is Tecna Impact. So all my contact information is there, tecna-impact.com. And for Probusway, well, it's probusway.com as well. And you can always shoot me an email, phone call me. I'd be more than happy to be able to talk to you about it. The whole thing here is one of the things that I've learned through my M&A experience, and like I said, I don't like to call it M&A because we're a different kind of institution. But one of the things that we've seen is people get afraid to be able to look for financing because they have a bad credit score, because they haven't been able to pay their credit cards. And I'm talking about the business side, not so much the real estate or the personal side. But they feel that they have a bad credit score because they haven't been able to pay their credit cards, because they haven't been able to fulfill their commitments because of a bad situation in their lives, there's no way they can get some cash or refinancing or lines of credit or so on and so forth. That's absolutely not true. Yes, under some cash structures or some financial structures, obviously that is certainly the case. But there are a lot of companies like me, like ours, like Probusway and my team, that we see a credit report as more of an X-ray of the challenging times that you have been going through. But what we want to do is being able to help you solve those challenges. And by looking the other way, we won't be able to help you. There's so many companies out there that have so much potential, and all they need to be able to reach out to people like me and many of my other colleagues in the industry, and just talk to them. If you feel you have a good product, you have a good team, just reach out, have a conversation, start right there, and then see where that takes you. I don't know if anybody, you want to go into questions?
Yeah, well, if anybody needs anything on the financing side with us, you could email loans@nationwidelendingdirect.com or visit our website, nationwidelendingdirect.com. My staff, my operations staff, and my management team are, fantastic. They're all trained by me directly and can help you with anything. And if you mention myself or this conference, I'll be available as well. Through a scheduled call to get on the phone and help in any way that I can. And we're here to add value. So if there's anybody that has any questions for Ernesto or I, we're here to answer that.
Good job, guys.
Okay.
Well done. A couple of things. You have spoken primarily about loans. Does your infrastructure accommodate lines?
Accommodate lines?
Lines, yes. Loans, basically, you
Yeah.
collect.
So there's lines
cash.
of credit on the residential side, on the commercial side, on the business side. The most popular lines of credit that we're seeing, there's business lines of credit.
Right.
There's accounts receivable factoring lines of credit. Those
Right.
are on the business side. On the real estate side, there's on the residential side, you can have a line of credit for construction or for renovation. Those are the most common lines of credit. There's home equity lines of credit, but those
Right.
typically you need 2 years tax returns on. There's blanket lines of credit. So if you're going to be buying a portfolio of properties, we can give you a credit line to buy multiple properties or a construction loan to construct multiple properties. So there are credit facilities that are available in that sense, for example. Those are just a dozen that I mentioned.
Does your infrastructure accommodate lines of credit?
Yeah, I mean, our infrastructure accommodates lines of credit.
Okay, well, good. By the way, your answer regarding borrowing money from your home to buy stocks is a no-no. It's an absolute no-no. Whether you're a financial advisor or fiduciary, whatever it is, you violate the FINRAC and SEC covenants if your eyes are open to somebody who is borrowing money from their home to buy equities. That's an absolute no-no. Just a comment. But good job, guys.
Thank you.
Hey, great work, folks. So quick question, more towards Ernesto, I think, just because on the residential side, I think, credit scores, there's data out there available to kind of help you underwrite the risk and such. But Ernesto, you talked about a ton of different things you have to look at, a lot of data on the M&A side, working with clients or your own acquisitions. What are you currently using in the data and AI side technology to help support what you're doing now, or how could that help you in the future?
Well, we are involved, and the reality is we use AI structures and other type of technology to more than to determine whether a particular company is it's a good fit for us or we're a good fit for them, because it goes both ways. We use it more in order to be able to implement systems within the company once we actually move forward into an investment position or a kind of a partnership situation. We utilize our resources in AI and other kind of technology to bring them into that particular company and create efficiencies. What do I mean by that? It's a company, just by implementing different types of technology and different types of strategies. Company that it's selling right now, I don't know, I'm just going to throw a number in there, $100,000, and maybe it's making $20,000 out of gross profit. Just by implementing these little changes, you can make the company so much more efficient to bring it to a 30%, to a 40%, to a 50% gross profit margin. But that's where we actually utilize technology. We don't utilize technology to make our evaluation of a particular company and the needs that has. I'm the first filter. Well, I have a team of wonderful people that actually help me go through all the opportunities and everything else. But when it actually comes to having conversations with business owners, I'm the first filter. I want to sit down with a person, understand the emotions of that particular entrepreneur or business leader, and understand why is it that he's going through the struggle and what is it that I can do to help. I haven't found any kind of technology that can actually relate that particular emotional part. M&A is a lot of emotion and very little of basically procedures. You know, it's you need that human touch, you need that human contact, you need to understand more. And I don't know so far, no Siri, no Alexa, you know, no artificial intelligence that can actually bring that sense into the equation.